All right, what's going on, Alpha Futures YouTube? I'm here with Planty today. This is my first time doing one of the Alpha Reacts. These I've actually done extremely well. You guys seem to get a kick out of these on Instagram, TikTok, YouTube, all that stuff. So we're going to be going over some of the most viral videos we've seen on the futures side of things today. And I've got my man Planty with me here today.
Hi, Ben. Yeah, this should be good fun. Let's get on with it without further ado.
What do you think when you see this chart? Okay, I want you to think very, very critically. It's not a complicated answer. Okay, what are you thinking? Okay, well, what I'm thinking is here's a bearish fair value gap, and we have a monstrous rocky candle over it with lots of jet fuel, as ICT says. If I was in shorts here, I'd be thinking, damn, I'm about to get wrecked. So what should you do in this scenario? Well, if you think you're gonna get wrecked from the short side, then why not take a long, right? That's exactly how I trade. And you can clearly see, like, it's common sense to, like, it's not advanced analysis. It's just, oh, if I'm a short, I'm thinking I'm getting wrecked here. So what am I gonna do? I'm gonna long, and I'll just target the next highs. And it's the easiest strategy in the world, in my opinion. And it's just, I don't really know how else to explain it this easy.
Any thoughts?
Yeah, so the jet fuel, momentum, whatever you want to call it, that's what I'd be looking for there. Saying it's the easiest strategy in the world is definitely putting it way too simply, because the best strategies in the world still lose all the time. But yeah, overall,
that could easily reverse. Why would you take that trade?
For me, that's actually a late entry, personally, for me and my style. Like, I'm not sure what time frame I'm looking at here. If it is like the 1 minute, I probably missed that entry. If that's the 5 minute, though, I'm looking for those equal lows and then actually that higher low print just there. That's what I look for on the 5 minute. If this is a lower time frame, I can't tell from his video here, I might miss that entry. But for me, looking at this chart, that's kind of a late entry for me in my style. Obviously, it works for him. But yeah, looking for that momentum or jet fuel, as he says here, that's what I'd be looking for to go long. But I'm kind of looking to catch that move, right? Like he said, he recognized the fair value gap there. For me, that's typically what I actually use for a lot of targets, are those fair value gaps, rather than that being my entry in the imbalance or fair value gap, whatever you want to call it.
For me, I'm looking for an end of a wave there and then a retest, which is what's in there.
Yeah.
But I'd like to see, obviously, what time frame it is, because you're not quite sure in the bigger setup.
How's it going, guys? I'm going to show you how to find your daily bias when you're going into your trading day. The way I use daily bias is to tell me which direction I should be taking trades in. So for example, if my daily bias is bullish, why would I go ahead and take any shorts if my high time frame draw is higher? Some of you guys may know how I trade. I use inverse fair value gaps quite a lot, and so this is an example of a trade that I would take right here. The 1 hour time frame, and what we see is almost the same thing that we took on the 1 minute. So what I do is I take the same logic from the smaller time frames and go to the higher time frames, and that is what allows me to say where I want price to go. No matter how high or low the time frame is, the price always respects the same areas and key levels. And honestly, sometimes on the higher time frames, these work even better, because we know that higher time frame always rules over lower. Since we inverted this gap, I want price to target this for the rest of the day. That is going to be my target. I'm only going to take longs, because if I would do this on the 1 minute, why wouldn't I go ahead and apply that logic to the 1 hour time frame? And then this would allow me to be safe with any trades that I take, because my overall drawn liquidity is higher, so that I can take trades on the smaller time frames up to that higher drawn liquidity. So then I can increase my edge and make more probable trades.
It's kind of fine. I don't like the way he's saying always. It's guaranteed, and I'm stuck with my drawdown zone. And
yeah, it was the same thing as even the other video, just saying, you know what I mean, the strategy's so easy. I don't get why people get it wrong, because like I said, the best strategies lose all the time too. But overall, I do really like what he's saying, talking about applying basic price action. I do like that he's saying that, because that's definitely the way I try to trade too. Like I try to teach people actually same way we climb from high time frame down to lower for our entries. I like doing the same thing, but opposite on my exits. If I entered on the 5 minute, I'm trying not to exit until I'm looking at the hourly, the daily. That's typically how I capture.
Just get your confirmation.
Yeah, and the biggest moves possible. So I'm going to guess that's probably where he was going with it, talking about the daily bias. Is I like using the daily and 1 hour for a lot of my targets, and I actually climb time frames when I'm exiting my trades to try to hold for those targets. That's me personally. I don't know if he does the same, but I do like that he's talking about, like, hey, price action and structure should be same, you know what I mean, context and kind of concepts across all time frames. That is if you're trading consistent strategy. Anyways, you know, some people talk about 1 minute fair value gaps and then they ignore the ones on the hourly. That doesn't make a lot of sense to me.
No,
so I do like I do like
he's
consistent there. Yeah, I do like his consistency there, at least saying that, like, hey, he trades the same concepts across all time frames, because I do think that's what a consistent trader needs to do.
This is it. I mean, you know, it's not, that isn't jumping around strategies. That is strategy within strategy, isn't it? It's all about confirmation, confluence of time frames. That is what we're here to do.
He's got the tape on his mouth.
Oh my god.
It's got to come
Alright,
off.
so that's TP1. Motherfucker, that kind of hurts. TP2 is going to be up here.
This is where the swearing comes in. Oh yeah, okay. You won on a dollar lot over there, and
Go ahead. Let's fucking go. Alright, we're out there. That'll be the only trade I take today because price action is complete dog shit. So we hit 1 TP right here. We moved stop, sorted a break even, and then we went TP2 right there. Pretty nice expansion move, but that'll be all for me today. Up 2 bands. Let's go.
okay, good, entertaining video. Right, TP1 and TP2. Do you use those?
Yeah, actually, the thing I was going to ask, but he answered it there in the video. It's going to be like, I was wondering if he slid his stop to break even at TP1 because, like he put there, this is where good psychology comes in. Only way I ever stay calm in a trade is once I get that stop to break even. So I did actually like that he answered that question there because, I mean, he did stay relatively calm. The mouth tape was a good bit and everything there, but he did. He stayed calm in that trade. And for me, when I teach people, is the only way you're going to be calm is if risk is off the table, which is exactly what he did.
The more you can
kudos
lock
for
in
that.
situations that are risk-free, it's the better, isn't it?
Right.
And
right.
it's not. And, we've talked about this with Pep before. The psychology of not losing and moving around your stop loss. And people say don't move your stop loss, but you are changing the parameters in your favour by taking away the downside, aren't you? And particularly in the way you have to trade in the futures environment, picking up consecutive, even small wins is good, isn't it?
Oh, absolutely. Consistency in any market is going to be the name of the game, right? But yeah, that was my one question from this video is, okay, when you stayed calm, was stop at break even? Because that's what I think most people struggle with, not getting that stop to break even.
Look, and now look where it is,
And then it'll go into a loss.
So how do you deal with that when you've just missed out on TP2 because you broke even on the stop loss?
That's the market,
That's
right?
the market.
You know what I mean? Like, hey, most traders are not profitable. If you found a way to even be a small amount of profitable that day, you were beating most traders. But yeah, I actually mentioned it in the other video too. I'm curious to see, again, what helps with me and my psychology, what that stop is at break even. I climb time frames because I'm assuming this was like the 1 minute here, how quickly it was moving anyways, unless he just sped up a higher time frame. For me, what keeps me calm, again, that good psychology is climbing the time frames. Is like, oh, does this still look bullish? Because the 1 minute's not going to give me the picture I need for me and my trading.
A lot of random action. What time frame do you tend to put your stop loss from?
5 minutes where I start, and I climb from there up to the hourly. I try to watch as many trades as I can on the hourly. That's for me what I think most larger players in the market are going to be watching.
Yeah,
is going to be the
you
hourly.
Get caught
time
in a lot of
frame.
noise otherwise, don't you?
Yep, absolutely.
So the cool thing about futures is there is no Greeks and no theta. So if you see something like this and we're chopping around and you were trading something like options, this would kill you because of theta eating away at your premiums. But I can set my bracket orders and then go about my day and let this play out. And if we chop around, it's no big deal because again, there is no Greeks and there's no theta when it comes to futures trading.
Absolutely right. She explained it well. That's one of the massive advantages of futures over options. It's why I personally started trading even CFDs and futures was to get away from the Greeks because.
But on that basis, she's talking about daily trading there, doesn't she? Really?
Yes.
For theta to come in. So don't let that put you off. The Greeks are important, and trying to get long of some of them is where you can make a lot of the money over the longer time frames. But she's quite right; it takes away the pressure buy in this environment, and particularly being a day trading account.
Yep. Yeah, options are still, in my opinion, I mean, they are the best way to exponentially flip an account. Like, that is absolutely true. They're also, because of that risk reward, they're one of the easiest ways to lose money, though. And she explained it well. You know what I mean? Theta is going to be why so many options traders lose money in general. Anybody that doesn't know, theta is obviously time decay on options contracts that is actively working against you as the trader and working for those that are actually selling contracts, which I've learned a lot from traders over the years that actually sell contracts. That's for me when I was like, that's where a lot of the money is in options. But me being a day trader, that's why I actually made the switch to futures and CFDs originally, was to get away from theta.
Yeah,
so she's absolutely right. She explained it well. I think that's a major advantage why most people should at least consider futures trading, is if you're getting frustrated with options, there's a way to get leverage without theta, and the answer to that is futures.
If you're still thinking that this or this is liquidity, like a dumbass uninformed retail, allow me to wake you up a little bit and open your mind on how professionals study liquidity. You need to know that liquidity isn't retail stop losses that banks are hunting. Shut the fuck up. There's two types of liquidity: market makers and market takers. These are the market makers, aka resting or passive liquidity. These are buy limits below the price and sell limits above the price. They're basically the menu, the catalog of the market. They sit in the order book to wait for someone to go and buy on them or sell on them. This someone is market takers or aggressive liquidity, aka people actually pushing the buy and sell button, so market orders, and also stop orders. So stop losses or buy stops and sell stops are part of aggressive liquidity. They're only one side of the market. So the only liquidity you can be fairly sure is actually there in the market is buy limits and sell limits in the book. And markets aren't hunting just for stop liquidity, they're also hunting for limit liquidity, market makers. So they are generally attracted by these zones.
I wanted to interrupt that, but it was quite fun. That's probably the best description of liquidity I've seen for a while from any of these YouTube things.
I agree. I was going to say, it was like, I'm sure he got a lot of people going to watch that video because engaging, did well introducing it too. But I love that, you know what I mean, every retail trade, every time they take a loss. I mean, like, market makers found me, like only me. That is what most people that, I mean, I get it. You get frustrated in the market, you're looking for something to blame.
You just feel like you're being hunted all the time. It's like it's sod's law, isn't it? You put it on at the wrong level. That's the end of the day. You're getting hit or taken. Yeah, I mean, I used to have hair before people started telling me about how retail stops were being sought out. It's crazy. No, it's really, you know, having been from that market making situation for most of my career, then it's good to see people finally catching up. And I was writing in the preview last week about where the market's going to go, because it all depends on what position. The gamma position of the market was quite short. Having, you know, in the post-election situation, it was all about what are they going to do once they start being hit, and just how far down would the market go. And obviously, we didn't go too far because they're scared of the Santa rally, etc. So they were picking that off and absorbing the liquidity. And people need to know that psychology, as well as the fact that orders often are just sat there as, you know, icebergs or whatever. You know, that's not moving until they decide it's moving. And often it's if they're getting it too easy or not being hit or taken enough, that's when they'll move. It's not really anything to do with the chart setups everyone tries to tell you.
Right. And that's what I think a lot of people, like, which I do think is true. Market makers have talked before, like some of the best trades they've ever had is after a liquidity sweep, after a bunch of stop outs. Yeah. That doesn't mean you as a singular retail trader are getting caught in that every time. And that's what I think his point of this video was. And like, hey, it's a lot deeper than that. Let's talk about it. So I think he did a good job introducing whatever video he's got. I'm kind of interested in watching it. You know what I mean? He did a good job there.
I remember being at the conference, some guys told me all about the manipulation, you know, from the ICT and stuff. So what does happen, you know, that manipulation is real. It's normally the end of an order. You don't want to be selling or buying the last bit of the order right at price. You want to get some discount or premium into it, and that's why you get these very gappy reversals. It's market makers literally trying to find their edge.
Sure.
Alex should have done this one. Yeah, I've been trying to get Danny to let me put this stuff in my videos. He's too worried about
I'd love to see that. You should go ahead. Yeah. Hey, trading can be fun sometimes.
That's the whole point. Don't take it too seriously. You know, obviously, don't get suicidal, downbeat when it goes wrong, but certainly have some fun. It's like we always say: if you're winning, make sure you get something out of it. You know, buy something. You know, don't just roll it all into the next super win to get blown up if that's your style of trading.
Watch price in the morning between 9:30 and 11 o'clock. Wait for price to run through a liquidity above or below. Don't even have a bias. You don't care about a bias. I want to see an obvious run above a high or relative equal highs and then reject that. I want to see an opposing liquidity pull. I want to see it move sharply in that direction. Once it does that, any fucking fair value gap, any of them, once that occurs, as soon as it trades into fair value gap, I'm using that. I'm putting a 5-handle stop loss on it, and I'm waiting for it to rip. 5 handles, half my trade's coming off, and then I'm waiting for it to trade in the opposing liquidity. There it is.
I'm confused. Talk me through that, Ben, because to me it looked like he was entering and getting filled every time. Or was he selling that?
Oh, he was selling that.
Right.
Yeah. To me, it's just like I think he used a lot of big words to try to grab people there, and to me, that doesn't explain well to the audience what he just did. Because right, for what I'm seeing there is like, okay, you talk about the equal highs, and we printed a lower high. For me, that's how I would explain that entry. But then he says, any fair value gap is what we're looking for. Okay, is that your entry or are those your targets? Because like I said, for me in my style, I like using fair value gaps or imbalances, whatever you want to call them.
Yep.
For targets, typically, I have a tough time wanting to enter in them. So I think that could have used a little bit better explanation there. How do you use that for your entries, right? Because that's what I got from that is he uses fair value gaps for his entries, which is fine. Of course, like nothing wrong with that strategy. But I don't think he explained that particularly well for the audience to understand what just happened.
And for a newbie, that's difficult because you're taking on the reversal every time there, aren't you? And it's,
right. Well, and he just
you're
like,
looking for momentum. What's the signal for why that momentum's not completely reversed?
Yeah, and for me, right, like he said, next liquidity pool, like.
Where's the signpost for that then?
Right, exactly. And like I said, for me, it would be like, oh, I'm targeting my next hourly high. Like that's an easy way to explain that to the audience. So, I mean, if he actually took the trade, it looked like a good trade. But I think it was just a lot of big words there that any newbie audience is not going to understand there.
No, I struggle watching videos like that. I feel like it feels very cherry picked at the time, like whether he's done that.
A perfect entry. Like I said, hey, if he took the trade, good for him. Just looked like a one tick perfect entry there.
I wasn't recording.
This is the guy we had before, isn't it?
Yeah, with the mouth tape. Looks like he's doing it in
I
school.
do like his.
I think he's in school.
You think are associated with having a house?
Oh, for sure.
Okay, so utilities are a big one. Benny, close the laptop.
I'm literally staring right at you. I didn't even do it. All right, I'm gonna put it on the floor. That's it.
Close the laptop. You don't need it on.
I gotta watch it.
No, you don't.
I do.
No, you don't.
There's a life of a trader here, though. I gotta
Sounds like my
watch
wife.
it.
Okay, you can go to discipline with it open, or you can stay in here.
I'll go
With it closed.
All right.
You know what? Yeah, definitely. I'm leaving. See you, babe. I'm not staying with your shit.
Kicked out of class for this shit, dude.
I'm not even winning. That's even worse.
Yeah, so now I'm
This
rooting
shit
for him.
better
big
win,
time.
bro. No way I get kicked out of class for losing trade. That's crazy. Fuck, it's gonna lose, bro.
That's the only thing
Day
he's done.
trader loses $2,000 and then gets kicked out of class.
And
Oh
detention.
my God,
That's a tough day.
We can do a bit more learning in
Tough
detention,
day.
can't he?
But hey, overall, I mean, I like that he showed his live P&L, showed a loss, so kudos for him for that. We don't see a lot of that on social media. But again, based on his other video, I mean, it seems like this guy does have a strategy he clearly sticks to. Like, to me, it looked like he was trying to catch a higher low there with stops at the low from before. All looks like, hey,
But
this guy's
equally-
been in the markets for a little bit.
Equally, he knows what he's doing. He's got
Yeah.
his setup and he's got his stop losses in place. You can switch off. You got to trust in your process, and sometimes you got to let go. You can come back and review that, but it's great fun. I love the fact she's doing it in school.
Yeah, also
So that
good.
shows you can do it in all walks of life, but you got to get some.
Yeah, so I was gonna say he's trading way younger than I picked it up, so kudos for him for doing it.
But don't let it
tough
take
day.
over.
Tough
Yeah.
day, like detention and $2,000 loss. So, like I said, the second he got kicked out of class, I was like, I was already rooting
Yeah,
for
come
him,
on,
but I
man.
definitely am now. But yeah, I wish that trade would have hit for him.
Good, man. So, Steve, here he is, the man, the myth, the legend. All right, break down what you're doing right now. It's 8 o'clock in the morning. What are you looking for? What are you kind of focused on?
So I'm just getting my eyes, zeroed in on what's going on. I just walked in about 10 minutes ago, just start getting my desk organized, and then I'm just starting my live room at 8. Checking my economic calendar because I don't like to trade into any economic news. So if there's any 8:30 numbers coming out or at 10 o'clock, I want to get ready and prepared for it. But just right now, I'm just going left to right, just checking out the futures contracts, where the overall markets are. Looking at some of the forexes, the pound, the euro, the dollar, yen, and looking at the index futures.
How's that break
I'm
down?
trying to buy the S&P futures because the futures 8 o'clock in the morning. Equity markets start at 9:30, but I got a lot of guys who trade futures when I come in at 8 o'clock in the morning. So whether it's the index futures, the crude oil, currency markets. I have a GDP number coming in at 8:30. So the economy looks like it's strong.
It's a lot.
It's
I'd
a lot.
say,
but-
yeah, I'm sure that's what you. Is that what like your day to day looked like
Yeah,
in the
I
past?
can't-
Yeah.
Yeah, and unfortunately still.
Yeah.
You got to wake up. You got to be on top of it. This is the whole point of having a plan. Fundamentals and it's all well and good just watching the charts, but we want to know what's moving the charts, and that's getting to that edge area of, knowing and expecting what's going to happen. You should have an idea of where things are going to be moving from. It's not gambling or guessing what's going on. It's having a formulated plan of what might happen. Hopefully, having looked at other data points that have got you towards that, so you've got a better chance of winning. You're not going to get it right. We're not a fortune teller, but we're trying to morph ourselves into that 55-60% right area, and then that's when we can compound, isn't it? And that's when we can know when to cut the losses is as important, or not to take the trade is actually getting the winning trade.
Yeah, I wish it showed more of too there, like, because obviously this guy's a professional at a traditional prop firm here and everything. I kind of wish we could see how many other traders were there with him. You know what I mean? Like making a decision on the trade and stuff. Because that's what's always interested me about traditional props is how many people are actually making the decision to click that buy or sell button. You know?
I think it's tough trading on your own, and even in a professional prop environment, it's tough. You need to bounce ideas off people, otherwise you end up selecting your own bias by the end of the day, or missing stuff, or the psychology will get you down. It's bound. That's why generally teams work in at least two normally, just to make sure that there's a bounce off between each other.
Yeah, that's what I've always been curious about. Yeah, I totally agree. But yeah, I would just say for most people's purposes, you don't need that many screens.
No,
like
exactly.
That's what I think a lot of people try to replicate at home.
That's the beauty of tabbing, isn't it?
Yeah, that's what a lot of people try to replicate at home, though. They think they need 30 screens. Realize this guy does this traditional prop firm space. He's probably been doing it for, I would guess, at least 20 years.
You do get used to having a big real estate space, equivalent of
I'm sure it's nice. But again, like you said,
but
it's a team there using all that. It's not just one guy.
And it's a classic that you'll always. The reason why you do that is because the day that you need that screen, it's covered up with something, you can't get it. And once upon a time, we had, before computers got better at talking to each other, we had different keyboards and logins for different screens. Could you find the damn mouse or whatever for the right screen? You only lose once doing that. Before the tech guy gets brought around and starts getting hammered on the desk. But yeah, I mean, like, tabbing, trading view. I mean, just having tabs, you can scroll through them. Have alerts. Alerts are massive in this modern environment.
Oh, yeah.
You can simulate watching them by doing that, and then you can go and focus in on what's important to you. But part of having the plan, and he's all over where his limits are and what people are interested in, then you'll be focused on those. So you haven't got to look at everything all the time, but you need to have a process where you find out what's important and create a process.
Yeah, I also like that too. Like, again, traditional prop, like market maker type environment there. We always talk about, notice he didn't have like, oh, there's the retail stop losses that I'm going to take. And you know what I mean? Yeah,
that's
not on there.
Over here.
Right. Like he's looking at fundamentals, and also thought that was interesting too, that he doesn't trade into economic news, which so many people try to catch all the time. If you have an edge to do that, go ahead. But that shows you a traditional prop trader that's been doing this for years doesn't even like trading into those economic events. If you're a beginner, that's probably a pretty good hint that you shouldn't be doing it.
It's because the T0, it's a random walk, and you often get just latent trade. We know there's a thin volume community that just buys the first tick, gambles, whatever through it.
Yep.
That does happen in the real world out there. People are just trying to scalp very quickly.
Sure.
So you don't necessarily get the right information coming through straight away. But it is important, I think, to prepared for it. And there's no way he won't be prepared for what he's
you're
expecting.
saying, even said if the GDP is strong, I know my longs are confirmed. Yep.
So you're ready to react for the 2 or 3 different situations that could come for it. That's the power of following the fundamentals. All these guys that give up, I'm not bothering with that, blah, blah. Well, you shouldn't, because you need to know when something's wrong. That's the opportunity you've been waiting for. You know?
Don't let these massive FU candles blow your account. I call them FU candles because it's the market saying FU, I'm hunting some liquidity. If you get caught trying to chase these candles, they can take away weeks worth of profit. What you want to do is zoom out, look to the left, and see what kind of liquidity the market is hunting. On the move up, we generated all this sell side liquidity. So what the market is doing with this massive move down is hunting that liquidity. I have a key level system that I trade. So when price gets to one of those levels, which is this purple line, then I can take a trade. We'll watch price trade down, take all that liquidity, tap my level. Now I can look to enter the trade. Liquidity's been taken. We're not getting caught in the FU candles. Now I want to see displacement above my level. We get the level hold here and the displacement, this big up close candle. Next, I want to find some ICT structure to enter the trade. We get that structure right here with this OTE range or discount area. We also have a small fair value gap right here that we hold. So we can take a long position targeting this upside liquidity. This is the buy side liquidity we expect the market to reach to, where we set our profit targets. My level system doesn't allow me to take trades or chase price here because I only enter at my key levels. Don't get caught chasing the FU candles. They will wreck your account.
Fair enough. He's saying all the right things at the end. You know, he's got a method, and he's happy to give it away. Blah blah blah. But you're right. I mean, I'm looking at that structure, and again, having had certain setups in for the Nasdaq and blah blah, and then I'm suddenly seeing loads of people putting bearish alternatives up. I was not believing my own strategy yesterday, so I started taking on that move rather than having been long for weeks.
Sure.
Instead of waiting until like the structure he's got there, it's either in the way I look at things, that is either a 3-wave setup or it's a 5-wave, both of which will give you a turning point setups, which do marry up with a lot of ICT principles at the turning points. So it is a case of be patient and wait. Don't try and second guess the move.
That was my big takeaway here. Was like same way he's saying FU candles, which I like that term. But same thing as right. Don't catch a falling knife. That's what I got from that, and he was disciplined enough to wait for his level. Again, I think for a lot of newbies, like the displacement idea, and like we have to wait for that fair value gap to print. That's always been a little too much for me when teaching beginners and stuff. To me, that would, again, like the same thing we talk about is like, sure, he got his key level on a higher time frame, some sort of higher low. That's what I'd be looking for. And it looks like we actually would have caught the same entry just playing structure. But I think that shows you, too, the consistent thing, I think, for all day traders is always going to be playing market structure. And that's really what ICT or like any trader that can carry their weight with concepts, it's always just going to be market structure to some extent. Now, they might have fair value gaps and displacement and
these
stuff
are all
put in there.
Confluences too, but you like I say, the premise has got to be you've got to process where are the turning points for you. So,
his discipline to wait for his key level, I think, is the takeaway that most traders should be like, yeah, that's what you want to replicate.
Otherwise, it's Edward Scissorhands.
Yeah.
count your fingers.
Day in the life of a futures trader that hates futures trading. I woke up, double-checked the time, realized it's time to trade, so I got out of bed, slipped under my lucky slides, sat down, hopped right on NQ. This was me really thinking hard about what trade to take. I really couldn't decide. Then I realized NQ traders are broke, and the people making real money are meme coin traders. So I switched right over to Photon to see some meme coins. I found this gem fart coin, put some money into that. If it goes to $1, I'll be a billionaire.
Fart coin. If it goes to $1, I'll be a billionaire.
I just went back to bed.
It sounds like everybody in what is it? Shiba Inu. That's what they're all waiting on. I see people with like 7 billion, and the whole thing's like goes to $1, I'll be rich.
You can create a coin called Dogecoin that's supposed to be a.
Oh, Shiba,
I'm saying,
Shiba was like people that missed Doge launched Shiba. And it's
the whole
like
scenario.
It's like 100th of the price of Doge right now. But I mean, hey, this actually, if I don't know when this video was put out, it probably aged well the last 2 weeks with the way meme coins are going again. It's Bitcoin.
That's probably why he's been in
pushing
bed
100K.
The serious thing, you're going to be lucky, or you just happen to catch something going if you're going to be getting up late. Have a little scan through the screens. What shall I punt on today? I mean, you're no more than a punter, are you really? It's all right. It's the opposite of what we want. It's very funny, but it's,
poking fun at some people out there that obviously do trade that way. But hey, as long as you're putting in meme coins what you're willing to lose, more power to you. Hope it runs for you.
But just have it in context, isn't it? So you know what you're doing.
And this is the exact strategy that I used to catch 600 ticks on NQ this morning. Step 1 of this 3-step strategy is to find a high time frame fair value gap, and in this case, this morning, we had a 90-minute inversion gap. Step 2 is SMT, and NQ took out this low on the hourly chart, and ES did not, forming SMT at these lows. It was also formed as we came down into this 90-minute gap. Now all I need is a change in state of delivery. As you can see, we have a 2-minute sell-side imbalance right here. That immediately gets traded through, and I'm going to use that as my entry, and we'll put our stop below this low. Now we'll take our standard deviation tool to mark out our target, and we'll just drag it right up to 1 standard deviations, and let's play this out. And there we go, target hit.
Seems like every single trader out there is ICT now, huh?
That's
what it seems like. Seems like everybody possible. Thing I thought was interesting though was the standard deviation for setting his target. Actually, I haven't seen that before. I'm somebody that likes to use, I've talked about it hundreds of times now, but like hourly highs and lows for my targets. I thought the standard deviation there was interesting.
But again, this is just not, if you've got Bollinger Bands already up there, the old school stuff, then
Yeah, sure.
you know,
That's
you're
true.
looking for that. It's
That's true.
All depends. I mean, to be honest, you know, I've talked about it. If you can get it in between the 1 and 2 standard deviation band, you shouldn't really be selling until it comes back out into the no man's land. That's the way that you can walk things up or avoid being walked up, and vice versa. That's why I like to have them on in my lower time frames, because you can see what's going on, so you get a sense for when the real momentum trades are in there, and then you know when it's unwinding a little bit. You can avoid it doing the crossing of the bands, you know, when you've got the full mean reversion and through to the other side. So don't put anyone off doing those. And in fact, there's been a chat on my chat over the weekend with some guys are looking at some mean revariance models, and they use some of the wider standard deviation bands that marry up with fibs. So all the stuff, they're all confluences that we've talked about before, that you want to have there for entries and exits. You don't have to, live by them. But this guy's obviously got his pattern. That
I would say he's definitely somebody. At least I'd obviously have to talk with him more. But I love the debate with traders of, is trading an art or is it a science? He seems like it's somebody that's like buys into it as a science, right? And I think anybody that really likes indicators is going to be on that science side. I don't like indicators, honestly. I am more of trading as an art type person. I am definitely an opportunist trader. I think if you're going to be clicking buy and sell, you as a human are making decisions. That's usually what makes something art. You know what I mean?
You don't necessarily want to be too systematic, do you?
Right.
I mean, I'd say when people are struggling, and I go back to this, is just watching the screen.
Mm-hmm.
But having gone through years of that, is what really, it's the ticker watching of the classical trade. You can get a sense of where the stops are and where the people are. Not even having to draw the charts and the lines. You know where it's refusing and where it's bouncing off. And you get to feel that pattern. You know when they're moving up. You can see. I love using the DOM on the alpha ticks, because you can see where the weight of money is, and all of a sudden there'll be some big lumpy bits pop up. It's in the back of your mind. Then is that being cleared out? That didn't trade? But there's someone on the scene.
Absolutely.
So that is the nice arty bit of it, isn't it?
Yeah. As I knew what happened this year.
Definitely going down again. Well, that's the age old, isn't it? I mean, you have fun, but he's living every tick.
Yeah.
So if you're starting to think, is there a systematic trade to that, or isn't there? Is that a buy and hope?
Yeah, I mean, who knows if he actually had the stop loss set, but he had it drawn there on the on the screen. We even mentioned in another video, it was like, hey, for me, if you struggle with emotions, you're probably somebody that wants to get your stop to break even as quickly as possible, right? You need some sort of, we talked about other people using standard deviation, some people using TP1. It might be like a 5-minute print. That's when you get stop to break even. That's the best way to control your emotions, though, in my opinion, is getting that stop to break even maybe somewhat quickly if you are somebody that struggles with emotions.
If I found shouting at that stop loss to hold and then trying to coax it, really talk nice.
Usually works pretty well,
promise a few things, You go and do your chores. You tell the wife, definitely, the dogs are going out in a minute, don't you worry.
I do get a kick out of these videos, though, because I think it's just like, they're funny, first of all, but it also, I've said this in other videos, too. I was like, anybody that's like, you have to be a robot when you trade. Again, to me, automate your trading. You buy into the trading as a science side of things and take the human element out of it. Because, again, to me, the human element of trading is what makes it an art. I do like thinking if you were going to be a day trader, like you, Planty, you're a day trader, it is an art. Right? Otherwise, just automate it. Write an algorithm.
Exactly. And each their own. But don't go. But please stop putting a video on that this is the only way and this is guaranteed. Right? Because that just really winds me up.
No doubt.
But it is definitely an art and a science. And obviously, you're doing it professionally. You want to make money out of it, but have some fun as well. Otherwise, it is. And trust me, in the real world of trading, people still have fun. You can't be winning or trading all the time. There's got to be other moments to this, otherwise you just blow up. You will be the robot you're talking about.
Yeah.
This is the exact trading strategy that I use to make $20,000 per month. The first thing that we're going to do is mark out the previous day high and the previous day low. And then I'm going to mark out the first candle of market open. We're then going to wait for a break and retest towards the upside to target your previous day's high, or we're going to look for a break below your opening range candle to target your previous day's low. As you can see, I have the first opening candle here marked out. We have a big push towards the downside, so now we're going to be looking for the retest of this opening candle for a move lower. As you can see, we're retesting the opening candle range low. That's where I go short with a stop just to break above, and I'm gonna look to target your previous day's low, which is all the way down towards your 218. Now I can drag this out and play the tape. And just like that, we had a super nice push down towards your previous day's low.
Nice. Finally, not an ICT trader too, right? Somebody that's playing an opening range. I mean, we've been waiting for a different strategy to show up, and he's clearly an opening range trader. It's good to see other strategies actually being posted. That's
other
good to
strategies
see.
may work, isn't it?
Yeah,
That's
exactly.
really-
It's good to see some others actually posted, because it does feel like ICT is just taking over, social media in general, and that's what people think is the only thing that works. So glad to see opening range trading is still out there. That was something I was taught early in my my trading career too, and I'm curious.
Which is why a lot of people mark up a lot of the openings across the globe, don't they?
Absolutely, and just the idea of the previous day high and low, which was going to be my next point. I wonder if he's somebody that just like consistently looks for the inside days. I'm sure you've heard that term, but people that don't know, that is when we stay relatively within the previous day high and low. So I'm not sure if he's somebody that just like on days we don't have an inside day, which would be a new daily high or a new daily low, if he's fine with not catching those breakouts, or if he has kind of a system to hold for those new highs or lows. Because to me, that strategy looks like he's almost always playing inside days, which is fine. To me, that's actually when most traders struggle, is when we get those inside days, but he almost capitalizes
which is
on
a bit
them.
more of a range trading day.
Yep.
And you've got to be prepared for lower payouts, more frequent ins and outs.
Yep, so that's what I'd be curious to know.
I think too much is made. I'm very much on having the stop loss in there, get yourself disciplined, but if you're dealing in a day trading environment, you've got to be willing to trade, and these things are going to have mini trends within them.
Yeah,
and it's almost become a dirty word to trade. You've got to be holding on for this stop loss and TP all the time. So, well, good luck, but those kind of breakouts come once a week. It's be reactive. There's nothing wrong with it.
Yeah, and that's what I mean. I'm curious to know is like, do you trail, like he was short there, do you just trail the lows until that TP's hit and you're out there, or do you try to hold for the breakout too? Because I know me and my style, I try to hold for that breakout. We talked again, like I'm an opportunist trader. I try to catch the big move when I can. Like I'm somebody that trails stops rather than cutting my trade short on the take profit side. I actually prefer to trail my stops.
So in my world, you'd be looking for consolidations that are finishing really. And
you're
like looking for the
right. Like let's say we actually get a little bit of consolidation at that low a day where his take profit was. I'm hoping that turns into a bear flag and we get the breakout. And if we don't get the breakout, that's why I've trailed my stop. That it might be an underwhelming win, but for me, it's worth that possible opportunity for the breakout, which. Again, it's good to see a different strategy actually on social media. I enjoyed that. But I think he explained...
I haven't prompted you because George thinks I've got a problem with ICT because I keep saying the same thing. I'm going, no, look,
it's just the only one out there.
It's the only one I hear.
Yeah,
I've gone to lengths of showing how that marries... A lot of the things marry up with my Elliott wave theories that we look at.
So, that's what I was saying. It's all market structure.
They're all things regurgitated over a long period.
Agreed.
It's just good for people to pick one or a style of one and stick to it. And then
no, it's good to see opening range because, like I said, that was something I was taught very early, 5-6 years ago now, and it's good to see it's still out there, exactly. Honestly.
It's all basic premises. It's brilliant. So I hope you enjoyed that. We went through various things. As Ben said, it's not all ICT. There's different concepts. We'll join you on another edition of Alpha Reacts.